Good morning, good afternoon, and welcome back. Zoya, podcast producer here. Autumn is well underway in the upper hemisphere of the world, and we at Instech have been incredibly busy launching Exponential Risk London 25, our cat risk conference held next year, 4th to 5th March. Do check out the website to find out more. Well, we don't have many podcasts left until the end of the year, and boy do we have a lineup. This week, Matthew Grant is joined by Kiran Aulakh, VP of Kroll's Fixed Advisory Asset Service, who is a self-proclaimed superfan of property rebuilding costs and valuation. We touch on how Kroll helps insurers, brokers and insurers with their platform that uses real-time data to assess underinsurance and overinsurance risks. That's pretty much it. Now let's see what Kiran and Matthew had to say.
Kiran, delighted you could join me. I'm careful what I say here, but there's not many people I've come across who are enthusiastic about property rebuilding costs and valuation. There's one other person, but it's great to have you on this. I know it's going to be a really fascinating discussion. Thanks for joining us.
No, it's a pleasure joining you as well to share that enthusiasm.
Well, listen, I know you're a keen hiker and you love walking along the South Downs, so I'm sorry we've got to do this with you locked up in an office, but who knows, we might invent walking podcasts soon to let you get back out into the open air.
Yeah, well, with all these hikes, what I really like is going to the pub straight afterwards. So I have got a secret glass of wine under here. But yeah, no, hiking's great. I love it.
You wouldn't be the first that's brought some support onto that podcast, but it won't be too painful, don't worry. So let's do a bit of an intro. So we've got our bot intern that does this for us. So it's based on what you've told us before, or you collectively. So Kroll provides property insurance valuation platform. You're supported by a global team of over 220 valuation agents. And the property platform combines proprietary data with your valuation algorithms to help identify underinsurance within the property portfolio and alert clients when further investigation is needed. And the parent company, and I know Kroll's got quite a complicated history, so people can look it up on Wikipedia if they want to understand how that all fits with Duff & Phelps acquisition. But founded in 1932, and importantly, 6,500 employees today. So pretty well-established company. And Kiran Aulakh, you are Vice President, Kroll Fixed Asset Advisory. How is that?
Very good. You remembered that well. So yes, I mean, I look after new business and all the rest of it, but honestly, Kroll, I'm super excited about what they're doing because they just naturally are marrying up technology with the consultants and just providing a really truly encompassing solution for understanding underinsurance, and not just under, also overinsurance as well. But the Kroll platform, I had visibility to it when I worked at Ventive, and I could see last year what a game changer this was going to be for clients that wanted to understand, impartially where and how their values are managed and how it looks. So yeah, super excited about this.
Great. And Ventive is or was part of Aon, the broker. So you had experience of seeing the world from that perspective as well. But just might be worthwhile, just in terms of your own background, just a couple of words about what Ventive does.
Yeah, so I used to work for Ventive, which was formerly a division of Aon eSolutions. And when I worked there, I worked directly. I was quite young back then, 20 years ago. I managed clients directly in terms of understanding how we could use technology to improve their current processes. So it meant that I was in the weeds a lot of the time. So my knowledge has sort of been gained from being on the floor doing that. So then if I apply that to where I am today, it's understanding how important value collection is as part of program placement, that the need to have impartial valuations is key, and the various roles that the teams play. So what does a broker want from this? What does an insurer want from this? And ultimately, what's the insured looking to gain? And then when I look at what Kroll are doing in that space today in terms of an all-encompassing solution, we can build programs to help support that placement program.
So you mentioned undervaluation, overvaluation. Essentially, this is where buildings are given a valuation, which I think it varies around the world on what the impact is going to be on ultimately what the payout is. But can you just talk a little bit about, why is it so important to get that valuation right, both for the insurer and for the original policyholder?
So looking at it firstly from the insured's perspective, for the insured, whenever they're looking to renew their property program, they're going to be going out to various insurers. and sharing their data that they've got in terms of their declared values. Those declared values and the certainty of the information they're providing around the scope, as in the construction of the construction, occupation, protection, all that information, the more they have, the more certainty they're getting on terms of that policy. So for the insured, it's really important and really key that the values, not just the declared values, but all the supporting information around that particular property or asset is there for them to be able to share with insurers so they can get a good quote. It's not just on the quote. So from the insured perspective, they're also going to look to see if there are any terms that they can negotiate out or into policies. For the insurer, it's that certainty of the data they're looking at is correct so that they're not having to do another scrub or clean of that information. So for the insurer, it's really important that those declared values are correct because it means they've now got a good start point, a good baseline for good customer service and being able to give good terms to their customer. And then if I look at a broker, it's really for them to be the second pair of eyes and support their insured in this process.
And are we talking about commercial and residential here, or just commercial buildings?
Both commercial and residential.
Also, certainly in the US, I know if a building is underinsured, there's quite a high potential that the payout might be reduced relative to what the declared value was. I think it works slightly differently in the UK. Is that also a pretty significant issue that you're helping insurers with?
Well, yes. So a lot of insurers, what they're looking to do now, the majority have in-house valuation teams. And the conversation I'm having at the moment more and more is that it's getting very competitive for them in trying to work in the market. And one thing they're looking to do is to remove things like the average clause, also have like more accurate indemnity periods put into the policies that are reflective of the current market. So all these things are really lending themselves towards a really good relationship. Should the worst happen, a more easier way of handling a loss because these things were taken into consideration at the placement stage. So it really is a case of transparency in the right sense, because that transparency then allows the insurer to put more accurate clauses into a policy because they've now got certainty over this impartial data that they're looking at in respect of declared values from a company like Kroll.
Two things you mentioned there, I just want to make sure we're clear on what they are. So you talked about the average clause and then the indemnity period. Could you just explain what both of those mean to people that might not be that close to insurance or claims?
Okay, so when it comes to insurance, not typically, but what will happen is with the declared values that a client provides or the insured provides may or may not be correct. Now, in the instance that a loss occurs and the declared value is understated, an average clause is applied, which will be a calculation that looks at what the current reinstatement value is of that property or asset. And then the insurer will either look to pay out on an average, I'm explaining in very basic terms, but they'll apply some kind of calculation to it, which means they don't fully pay out on the actual reinstatement cost. And therefore, the client and the insurer in instances like that, there can be some content on that subject. And then on the indemnity side, if you look at indemnity, and I admittedly only recently fully understood what it actually meant to an insured a couple of weeks ago, but this is where indemnity periods should be reflective of how quick it is to stand that property back up. But what you find is it's not always, unless evaluation's been done, you can't truly understand what a real period of time is that you're going to be out of business for that particular property. So that's why those two things come together. And these are the things that are being negotiated at the table. And our data is helping the insured and, more importantly, the insurer understand what that would look like and sort of removing any animosity should the worst happen.
That's very helpful. Thank you for that. So you've got people that have been out in the field doing the assessments. You're now combining that with the algorithms as we gave in the introduction. But can you just talk a little bit about how has Kroll evolved in the last few years, sort of learning from on the ground, and this is global, I believe, and actually building the analytics to make this more automated and I guess back to your prior point, easier to access and quicker to get that information.
So Kroll's traditional, the area I'm in is valuations for reinstatement. And every valuation starts from a baseline number. So Kroll had this baseline number they work from, used to be in a series of legacy systems that they pulled together to then get to that data. So the life of the platform that we're talking about today started from that start point in terms of merging that information and then applying factors outside of Kroll that apply to calculating what a reinstatement value is. So that whole premise of data being king and data helps you with decisions, we started using this tool in-house first, then approached by a very big insurer, and I'm allowed to use their name, AXA, and they asked, well, can we get access? And that's where this then became reality. But the beauty of this is that our valuers go out, there's 240 of them globally, they're doing on average 30,000 building visits a year. And they use the platform as the baseline. But more importantly, once they've done a valuation, they're adding their numbers back into the system. So it's a live talking, walking system, not just a data lake that you access once and never look at it again. So as information gets updated, we're able to apply that to our database and give access to our customers as well.
Oh, that's very helpful. And then what about third-party data sources? Because there's lots of companies out there, we know many of them, I think you do, who are providing additional data to complement these kind of technologies. Is Kroll sort of tapping into those as well as to sort of enhance the valuation estimates?
In terms of what we're tapping into, it's largely we're tapping into data that would be needed in terms of the factors for the algorithm. So, for instance, exchange rates would be needed, inflationary rates, anything that's got sort of supply chain impact to what we're valuing, we're going to be tapping into those data sources. But it's really important that we do that because the world, it is moving at 1,000 knots an hour at the moment. So having that ability to bring that data into an algorithm, it really supports the valuations we do.
You say the world is moving fast. I mean, as we're talking, Hurricane Milton is traveling at something like 160 miles per hour towards Tampa in the sort of footsteps of Hurricane Helene. How do you sort of account for that in the tools? Because clearly once you've had a lot of damage to an area, the rebuild costs go up because there's a shortage of supply. I mean, is that done after the fact? Because you can't predict what's going to happen in terms of where events are going to happen. So how do you sort of factor that in, or is it's just not part of what you do in the original assessment?
Well, it won't be instant because anything, if we're looking at world events taking place right now in terms of the hurricane and the impact that's going to have, what we will be doing is we will be looking at the impact. We were looking at some of those losses, and we've got analysts looking at this on our side. And then should the algorithm or the valuations need to change in some way, would look to make that amendment. How soon and how fast we make it will all depend upon how quick that we can get to that assessment of the impact it's going to have. But yes, we would be looking at that and looking at all factors that impact valuations.
Yeah, and I mean, we're recording this on Wednesday. Milton's due to arrive, I think, later this evening, depending on what time zone you're in. So we'll know a lot more by the time we go live. And then you've touched on this a little bit, but just to sort of bring it to life. So can you sort of talk about a day in the life of an underwriter, how they're actually accessing the Kroll information, or maybe as well as with the broker getting involved to make the assessments on the rebuild cost or the valuation, however you want to describe it?
So the way I see this being used by an insurer and the conversations I'm having with insurers is that what they would be looking to do is whether they're doing this for a residential, for an individual customer, or whether they're doing it commercially for a client that's got a portfolio of properties, they would look to assess the adequacy of that data that they've got to then understand from a sort of a RAG reporting, like a red, amber, green, on from that portfolio, what is flagging up as red and what is flagging up as amber, and look to take some kind of remedial action, or at least make their client aware that we've had this finding. And once they've got that information and they've shared that with that client, it then opens a door for negotiation on, well, look, if you have red properties, for instance, let's see if we can get those properties assessed for evaluation, whether that's done by Kroll or by another party, but ideally us. Or what you look to do is if it is quite a vast estate, let's have a look at this over a rolling 3 or 5 year program, But at least then there's remedial action being taken and the client is aware that this is going to have an impact on the property. But more importantly, the insurer looks at it and goes, I can be more favourable with you in terms, provided you're taking these remedial actions as part of your programme. So it really, for the insurer, puts them in a great place with their clients from a relationship perspective, because they're able to pinpoint and highlight the problem areas, but more importantly, can also give them a solution to that and really overcome any animosity further down the line should an event happen. But that's where I see insurers using this. I also see them using the data for benchmarking purposes. They may have an internal valuation team themselves, but they could be using our information with theirs to benchmark where they stand with things. Also assessing new business. So lots of possibilities in terms of what an insurer typical day would look like using our data. And because it is an API that's being provided, not just the platform, it can form part of their ecosystem with other departments and other teams as well. So I see a big opportunity here for insurers in terms of getting great data, great understanding to build really good relationships with their clients on this.
Yeah, it's very topical, and it's going to get more so. In a number of major insurers, you obviously mentioned AXA as one of them, have got a big strategic initiative to sort of collaborate with their clients, particularly on the commercial side, to help them understand about risk. And so, am I correct in understanding, when you talked about your RAG score, your red, amber, green score, or I think in the US they don't use amber, I think it's red, yellow, green. That's a dashboard that Kroll provide, but people can also, if they choose just to get the raw data through an API, they can bring that into their own system. Is that correct? You can choose whether you take your platform or integrate it into another system.
Yeah, that's exactly what that is. And the other thing I just want to add as well is that you're able to do this at scale. So the limitations are your internet, really, in terms of the speed at which information is going to be transferred across. But really doing this at scale is the other major plus point here, is that you're able to put in vast amounts of data, like 90,000 rows of information going in, which is removing hours of work for a team somewhere, because now you can look at your data at scale. You can look at an entire portfolio, an entire geography, look at it from a vertical perspective. I mean, it truly is. I mean, when I saw this, and I don't mean to be geeky on this, but that's what I just went, hold on, this has got so much potential in terms of supporting decision-making for the insurers in so many ways and helping them differentiate their product offerings as well by vertical. I mean, they could look to do something with the pharmaceutical side, for instance, or manufacturing based on what they're seeing from the valuation data. So it really is really exciting. I mean, you shared how passionate I am, but that's one of the things that I'm liking about this. It's not just the obvious, what is the reinstatement value for property one? It's also the potential it holds in terms of the insight you're getting on a particular geography, a particular area or vertical in terms of valuations.
Yeah, and everybody wins, of course, in this situation. And yeah. I don't think this is the way you're doing it yet, but correct me if I'm wrong. But I mean, there are people start to think about like one source of truth. So in your case, if you've got, you may have a client coming in through the brokers, we'll talk about them in a minute, with their properties. You may have an insurer that's looking at the same building. At the moment, they all stand separately, is that right? So you assess them their own merits, but at some point, there is the potential to build a source of truth for 100 Main Street that is being defined by independent data. Is I got that correct? So if today you're just working with client data, at some point in the future, there might be an opportunity to make that more independent and standalone.
Yep, that's exactly where we sort of envision this going. And that's one of the reasons I'm working very closely with the market today and talking to insurers and underwriters that are in the property space to understand really how are they doing it today in terms of, if they are doing it in-house, the indices they're applying, and really showing them the value and the power behind having an impartial view to it. But more importantly, how we apply standards such as ASA and the RIC standard to the valuations that we're doing. So really that power is there. And in fact, actually, you've just reminded me of a conversation I had just a few days ago with an insurer, and they specifically asked me, do your valuers check the valuations that are produced from the platform or the API? And the answer was actually, yes, we do. Because we use it as our own baseline for valuations, we are checking our database every day, that we work from that database. So a really powerful message in terms of where this is headed.
How do you check it? Is it like when you do a kind of test at school, you hand your answers over to your neighbour and they mark it? I mean, or does it, you have to wait until there's actually buildings got destroyed and you then validate it against the actual costs?
Well, we don't have to wait really necessarily until an actual loss happens, but really, and as horrible as it sounds, that is the real measure of how good our valuations is when a loss occurs, what was paid out from that. And I think that is the real test of it. But in terms of our valuations being checked, we ourselves here, we do desktop and traditional valuations. And because our software is used as the baseline of that, we have to regularly sense check what's being produced ourselves. But more importantly, as a result of that sense checking, we've also enhanced the platform to now include satellite imagery. So if there's a red mark showing up, we can hone in, have a look at the property on a map, pinpoint with a polygon exactly the area squared needed, that's the measurements needed, and then rerun a valuation because we've now got to the point where we can do that. So we're basically using our own tool for our own business and sharing that proprietary information with clients now.
And I mean, it's a classic case really. Is people talking about artificial intelligence and does it displace people's jobs or does it just change them? It sounds to me like you're I think it's 240 valuation agents now. As you keep getting more robust about your valuation, there's more value. There's a lot of value in terms of getting it right. Presumably they're now becoming more sophisticated in what they can do. So it's not so much you're displacing the agents. Maybe you don't grow them quite so fast, but you can actually use the tools to enhance what people on the ground are doing and people with local knowledge. Is that how it tends to work?
That's exactly how it's working today. And that's exactly how I see it working in the future, is that it's a hybrid solution because the automated values get you to a position of understanding the adequacy of what you've got. If everything's green, we're good to go. But if we're showing or flagging some areas in red, orange, let's look to see why that might be. And it could be something as simple as looking at the area squared or the occupancy not being correct or something of that sort. It can be anything, myriad of things, but at least we're getting to the data fast in a scalable way and then being able to remedy what may have gone wrong or what needs to be corrected in the future. But it's just really giving you that sort of unbiased view of your information, and it's impartial because, I've had insured say to me, well, our broker is internal or our insurer is doing this internal, but we need another opinion. And that's the trend I'm seeing, is that more and more insureds are wanting to do this for themselves and own that process of valuations. That's not to say that, I don't want to be, I don't want insurers or brokers looking at this, but I am seeing that trend as well, that especially the very large insureds, they definitely are jumping on this in terms of wanting to understand the information they've got.
Yeah, no, it makes a lot of sense. And actually, to talk about brokers, so we've had some of your colleagues on stage with WTW, talking a little bit about how you're working together, but could you sort of bring to life, we talked about how an insurer is using this, but in the world of broking, how are they using this, how are they using your tool to support their clients?
Yeah, so WTW, they are really a great example of how a broker can use our platform. They are the second pair of eyes for their clients, and as part of their process of placing property programs, they run an adequacy check of the declared values using our tool. Now, this stands them out right now because what they're able to do in a scalable way is understand how they can help remediate some of those areas where they might be underinsured. So they don't have, they have a valuations team, but it's not an in-house valuations team like ourselves. But some brokers are. And I just think there's something just more powerful about what Willis are doing with having this impartial view of the values. So they've partnered with us and they're getting good results from it as well.
Great. So Willis, I think they're now like to be called WTW, but that's just so people aren't confused.
WTW, I know.
You'll be able to put money in the WTW swear box next time we're in the office for using the old name.
I've probably filled it up.
Well, I mean, let's face it. Anyone in the world who uses acronyms and not prepared to spell them out, they should take responsibility if people want to spell them out. And then what about what's happening next? So as you sort of move beyond this, or Rebecca Fuller, who one of your colleagues I know is driving some new initiatives, what can we sort of look out for in 2025 coming in from Kroll?
Well, I mean, it's really exciting times coming ahead, and I know I'm an excitable beast as it is, but green valuations are next. I mean, it's the hot topic. It's a topic everybody is talking about in out there. But what we're doing here at Kroll is we're leading the way in being able to provide a valuation based on the EPC, which you said you would explain what the acronym is to everyone, along with what might be discerning factors that could improve the valuation as well for the property. But it's really exciting times. I mean, the whole work we're doing, especially, I mean, Rebecca's I'm not just saying it because she's my boss. I mean, she's genius. And in this, what we're doing is, and what's reflected is that we're driving majority of our research and development is client-led. We're listening to the industry and we're providing solutions to tackle some of those challenges that the industry are facing. And ESG is up there. I mean, it's the top subject. And the data around the EPC is available. And what we're looking to do, what we are doing, and we're launching this shortly, is the green valuations aspect of that. And it's playing a part in the property insurance writing process as well. So it's really key. But again, it just demonstrates how we're responding, reacting, and really bringing solutions to the table to help the insurers and the insurers overcome challenges like that.
Kiran, you've obviously been listening to the InStep podcast because you know how we like to spell out our acronyms, and you threw it back on me. You did also give me a chance to go and make sure I actually had this correctly. So through the power of Google generative AI now, I can be very comfortable in saying that EPC stands for Energy Performance Certificate, which provides information on the building's energy efficiency, including potential energy costs and carbon dioxide emissions. It also suggests ways to improve the building's energy efficiency and provides an estimated cost for each improvement. So absolutely spot on in terms of what you're doing around valuation. And that clearly is the next very sensible place to go, because there are independent assessments. And as you said, that is becoming a really big area from a regulatory point of view, and actually a big area for insurers too, because they're going to have to start reporting on their scope 3 emissions, which is what their customers are doing. So yeah, it makes complete sense to be looking in that area, and also helps promote move to net zero. So with all the great stuff you're doing, for somebody who's listening goes, okay, it's really intriguing, I'd like to try this out. What should they do to actually be able to learn a bit more about how this works, and if there's anything you can help them with that would work in practice, that would be useful as well?
Okay, so in terms of understanding the value of what we're doing, we are providing adequacy tests, an adequacy test of your data. So if you contact me, it's not an unlimited number of properties, but we put our money where our mouth is. If you were to send me some properties today, I can take a look at the current declared values with a small data set to go with it, in terms of, ideally, if you've got the square footage and the occupancy, that really helps us in giving you a better adequacy score. But we're happy to do an adequacy score for you on your current data. Again, just highlight, not an unlimited number of properties, but we can do that for you. We'll do that for free. And if you are interested, then the best way to contact me is on my email address. And that's Kiran, Kiran Aulakh, Aulakh, @Kroll.com. And Kroll is Kroll. So yeah, contact me and I'll be happy to run through and do an adequacy test for you, and really show you the power of some of this reporting.
Great. And actually, for those that didn't have their pen ready, there's a link in the episode notes. There'll be a link on the website to your LinkedIn profile, I think, rather than putting email up there. And also a quick plug for something we're doing that I've already used earlier on, but just also be interested to you, Kiran. So anybody wants to know about Kroll and what I should just be careful I say think about you, but what our digital intern has been listening to, you can go onto the InStep website and ask about what a Kroll do, and it actually gives a pretty comprehensive answer. So we covered a lot there, Kiran. Is there anything that we haven't talked about that you think is important to mention at this time?
I think we've covered the vast majority of it. And if I was sort of leaving behind one sort of sentiment on all of this, it's really around data and the scalability of it, but more importantly, that impartial view that we're providing and that independent valuation on that data set, which is current, and it's current, it's live, it's happening. And yeah, I love it.
What's so nice about it's easy to understand, as you said. It's relevant as a problem of undervaluation or overvaluation, which costs everybody money. You run analysis, you pay some money if you're an insurer or broker or I guess a client, and you get an answer back that can help you. So, I mean, yeah, why wouldn't you like that? I can see why.
There is like a vast, factors and index, everything happening behind the scenes, but in its simplest form, that's what it's doing. And that's what the beauty of it is, right? It's having that reassurance that, yes, the declared value is there, but so much goes behind that reinstatement valuation. It's a nice solution.
Great. Well, listen, it's been great catching up with you. It's great to meet you and joining Kroll. You said they're a fantastic team. We very much appreciated the support. And I'm looking forward to hearing all the people that have contacted you to get their portfolios assessed. You didn't say whether you'd give them the answers of which buildings are undervalued, or you just tell them that the cunning thing is to say X% of your properties are under or overvalued, but you've got to come and pay some money, which would be quite reasonable to find the answer. But we'll let people discover that.
Correct.
When they do the pilot study. Just contact Kiran to learn more. But Kiran, that was fantastic. You didn't take your glass of wine from under the table once, so hopefully it wasn't too stressful for you. And really look forward to some nice sort of autumn or fall, as our American friends will say, walks in the South Downs and some nice pubs at the end to de-stress. So thank you very much. I really enjoyed that conversation.
Thank you, Matthew.
Well, if you've made it this far, then I'm pretty sure you found this as interesting as I did. Before we end, I'd like to add that you can join Instech at the Data Jam on November 28th, hosted by the Insurance Network, organisers of the TinTech series of conferences. This one-day event explores the implications and opportunities of data, analytics, AI, and automation for all sectors and business lines within UK insurance. Google Data Jam to find the agenda. See you soon!